Hey, it's Joshua here with Mortgage Clarity, and today we're going to talk about VA and whether or not the VA loan program is more restrictive when it comes to the condition of a property. Now, this is actually, I think, a really good video because I know that there's a lot of misunderstanding or misconception out there in the real estate market that believes that a VA appraisal is more difficult. And it unfortunately has been at times a belief that has prevented better offers for from a veteran to maybe not get accepted because of the concern from the seller, more specifically the seller's agent, that given the condition of this particular property, it might be an issue and the seller doesn't want to do repairs for one reason or the other. So we're going to talk about that, and we're going to actually talk about something that most realtors and most lenders don't know about VA that actually makes VA, in most cases, a better loan program for properties that are in need of TLC compared to others. So why do people think VA is more restrictive? Well, I think if you go back to like the mid 90s and before, you will find that government programs were more picky on the condition of the property. So much so that it actually became quite a bit of an issue to where sellers did not want to accept FHA and VA type programs because of all the small little things that a seller would have to get done that were just kind of bothersome and would hold up transactions, have a little more cost to the seller. And so in response to this, the government programs did have to kind of ease up on what would be required. And what we're talking about is what's called MPRs, or minimum property standards. And this is something that all programs have, but again, the belief was government is more difficult on property reviews otherwise. Now, where this is true, and each program does have little unique things that can pop up. So we're talking about the thing in which 95% of homes fall into. And with government programs, one clear distinction between a government type program, which VA would be part of, is the requirement for what's called a head and shoulder inspection. So on a conventional or conforming loan, same terminology, just different words, it refers to Fannie Mae or Freddie Mac, the appraiser is not required to do what's called a head and shoulder inspection. On the government, they are. So what this means is on a government loan, the appraiser has to open up the crawl space. The guy will look down there and they're going to take a picture of the crawl space, and they're going to open the attic. They're going to pop their head up. They're going to take a picture. Now, they're not going to walk around. They're not going to crawl around. They're not home inspectors, but they are going to open it, take the picture, and note any obvious issues. So if you have a home that has water in the crawl space, or if you open up the attic and you see like a big wet spot underneath the roof that maybe it hasn't gotten down so you don't see it on the ceiling of the house, but you can see it on the roof, this is going to be called in these programs. And make no mistake, these are issues for all programs. If the conventional appraiser somehow got wind that there was an issue there, they would call it out. But since they're not required to look, they don't. The other place where I think it really kind of comes up with realtors is a conception on the exterior of the house when it comes to peeling and flaking paint. Now, there can be a little bit of a distinction here between conventional and government programs as far as how much they're going to allow of that before they call it an issue. But I think it's really important to understand that on all programs, if you have, failing siding, paint and stuff like that peeling, or you have fascia board with no paint on it, it's going to get called out. But what I've actually come to find in the 17 years I've been doing these loans is it's actually less about the program and more about the appraiser that got assigned to it. I have seen just ridiculously small, nitpicky stuff on paint get called out on a conventional appraisal. And I've seen things where I did not think this house was going to pass. I mean, I just, this is going to have to get paint done, and didn't get called out on the government program. So again, I really think that comes down more to the appraiser than it is to the differences in the programs. Now, here's what most people don't know about VA. VA will allow for these, what's called, they get listed on the minimum property requirement standards, to be waived. Now, just because VA allows for this does not mean that the particular lender you're working with, if you're the buyer or if you're the agent, the lender in which the buyer for your property is working with, does not necessarily mean that they will allow for it, but the program does. Because again, lenders can add additional restrictions. But here's what VA does allow. VA allows the lender to request a waiver of an item listed on that report. It's called the notice of value report that comes out after the appraisal is done. So if the notice of value report comes out and it lists a repair item, they can go back and say, we would like to request that this get waived and let the veteran do this work post close. And then VA will respond. And a lot of times they are going to allow that to be done. So I'm going to give you a real life example that I think will really sum it up, that shows how a VA was able to get a property done that you would not have been able to get done with the normal programs on conventional or FHA. So the seller had started a remodel of a bathroom, gutted the property, and then decided that they wanted to just sell the property. Ran out of funds, didn't want to finish it. The person buying it was a veteran using a VA home program, and when the appraisal came back, the notice of value stated items that had to be repaired in order to meet the minimum property requirements for VA, because of course you had a gutted bathroom. Now this house already had a bathroom that's fully functional, but this was the extra bathroom. And the veteran wanted to make these repairs themselves, and the seller didn't have the money to do so. So when it was able to go to VA and say, here's what we got, here's what we want to be waived and why, and VA responded and allowed almost all the items to be removed from the list and to close the loan without being completed prior to closing. The issues in this one that came back was basically health and safety. So you had a gutted bathroom with no sheetrock, so you had exposed electrical. VA came back and said, okay, we'll go ahead and let the veteran do the repairs, but we want the seller to get the insulation in, get the sheetrock up, and then from that point, the veteran can come in, do the tape, the texture, place the toilet in its place. There was no plumbing to be done. The plumbing was already there. And then they can finish out the remodel after they own the property. So there's a great example of something that would not have been done on these other programs. It just goes to show that if you do have a property that has TLC, it is in need of some paint and it's going to get called. Just because it got called on a VA appraisal does not mean it necessarily has to be done before you can close on the loan. And doesn't mean that the seller actually has to be the one to do it. So there's your takeaway. I hope this added a little mortgage clarity for you. Please, if you found this helpful, like or subscribe. If you have comments, feel free to drop the comments in there or reach out to me directly. And until next time, have a fantastic day. Bye for now.